Hey, what's going on, guys? This is Terrence Ray, and I'm back at you with another stock market update or weekly stock market update, shall I say. I missed last week. I apologize. I was out of town and then came back and was a little bit under the weather, but coming out of it pretty strong right now. So, without further ado, let's get back to the markets. So last week, as we can see on Friday, we had a nice sell-off Friday, and basically we gapped down on Friday. Um, just had a real the market just barreled down to the downside, and then by the end of the day, it pulled back a little bit. So this is what you got from last week. You actually had here you go on the 23rd, and then here you go the 24th, and then you're on the 26th because obviously the 25th was Christmas. And then here was Friday to gap down. Now, what I think, if we go look at the expected move for the week, the expected move for the week is what, 74 bucks, $74.47. That's a pretty good expected move. I think last week it may have been like $82, and we got all of that basically in like one day. We got all of that. If you look right here, was this the 18th? On the 18th, you got a range of $202 just on one day. And then you got another day. So we volatility is here. Vol has been, pumped into the option market. If we go look at the VIX, we'll see the VIX. Now this was on the 18th. Look at that big old candle. I mean, going from what let's call it 15 to 28 in one day. And then you can see how vol came out. And then here we go on Friday the 27th. You can see how it rolls up to about 18, almost 18 and a half, what almost like 1845, and then came back down to 1595. So this week, and if you look at my watch list, you see a whole lot of red besides oil. Oil was up on Friday, and then what Boeing was up 39 cents for the most part, but everything else was red. So this week, I think it's going to be hard to pick direction. This is the time, in my opinion, where I don't want to actually be directional. It'd be better, in my opinion, to just sell premium and with delta neutral strategies. Now you might can skew them a little bit, and I'll show you what I mean in a minute when I go over some underlines. But you can skew some of your options, right? So we'll talk about, maybe having a little slant to them or just being neutral. You can rack your brain trying to figure out, is it going to go up? Is it going to go down? I don't know. But I know vol is high. And I actually think vol can go higher. I think volatility can increase, right? So what does that look like? If volatility increases or goes up more, then generally you're going to have stocks going to the downside. So let's go look at some sectors, and then I got about two or three I want to pull up. Nothing really. Well, I'll go to XLV. Let's go to XLV, and then I actually got the healthcare sector pulled up, but I want to pull up the sector ETF, which is XLV. And if you look at this, you can see that the healthcare sector has been beaten up all the way down here, right? This is a yearly chart. So for the year, matter of fact, I'm just gonna do year to date. So basically it's started back here and it's down back where it started. It went up here and here we are. So if I just had to, and you got a 31 IV rank. So if I just had to make a trade in here, you can sell premium. Uh let's go look at the option market and I'll show you something that I would be looking at doing. Probably not gonna go 19 days. I'm gonna stay in the monthlies, go maybe 54 days. And you don't have the option market in here is kind of crappy. So this may not be a good sector to trade options in. And you say, well, I'm looking at the bid ask. And if I come out here, like these bid asks are really, really wide, it's going to be hard to get an accurate account because the market is closed right now. So probably be best to wait till the market open and then I could give. But I don't see a whole lot of open interest. So this is just one of those ones where one of those ETFs where you might not want to trade, but you can certainly go to the healthcare sector, which is what I was doing. So I'm just gonna come over here and click on watch list, or come over here to the top, go over the sectors, then go over to healthcare, and then here we go. So we could take a look at something like Johnson and Johnson. Chart looks similar. See how the chart see how it's been beaten down. So all I'm saying is this particular sector has already been beaten up. Now, if we're looking at the S&P 500 as a whole, you can see that the S&P 500 as a whole has been drifting up. It could be on its way to going down or correcting a little bit, but I'm going to a sector that has already been beaten up and is already down. So if I came in here, Johnson and Johnson has a 50 IV rank. We got earnings January 22nd. So that's going to put us like right here. So I would stay away from this one. Just because if you sell something out here, you just have to be prepared that you got earnings here. So you're going to have to trade, you're going to hold this trade through earnings more than likely. It's possible that it could decay by then. I doubt it because you got earnings here. So they're not going to let the vol is going to stay into this particular underline. So let's go look at another. Let's look at UNH. They got earnings on January 10th, Merck, February 4th, Pfizer, the 4th, Abbott Labs. So most of these have earnings coming up. So it's going to be tough to get you a trade in unless you're going to hold it through earnings. Unless you can find one outside of this February monthly. More than likely, all of them are going to have it. Eli Lilly. Now, another way you could play it is if you don't want to trade the options through the earnings, you could come in here and buy Johnson and Johnson. I'm not recommending buying it. I'm just saying that because it's beaten down, I wouldn't be surprised if we got a pop up into here up around to maybe 148 with a net where you get some resistance right here. So you got a gap right here. So that's one way of trading that. Um, Now another way, let's say we want to filter some stuff. Let's go show you another way. This might be, I'm going to come here, come to watch list, and I'm going to click on the sectors, and I'm going to go to healthcare again. And I'm gonna let's hit auto refresh. Now I got two stocks in the healthcare sector, and you say, what did I do? I got a certain way that I filter stocks here. I'm gonna go over that this week on Thursday. Not gonna do it on this video, so make sure you hit the like button, subscribe, and come back for the Thursday video. I'll do that one live. I'm gonna live stream that one. That'll be the first video of the year, and I will be placing a trade live there. I'm gonna try to do something a little different this year for the subscribers to be able to follow along with my portfolio while I do live trades, and I'll begin that on Thursday. And I'll go over how I filtered this. But basically, I just came to another area where I have stocks, right? And I put healthcare in, and I already got my filter over here, how I did it, right? So it gave up X-ray and PRGO. So let's go look at these two. Both of these are in the health sector. And this particular one has been beaten up. Now, what I like to do is to see if the options are viable. They're not. So you can't trade options in here. It's not liquid. Let's look at PRGO. What is this? Parago. I imagine you can't trade options in here either, but let's see. You can, you just don't have, you got you got open interest. I'm looking at open interest to see if people are here, but you don't have a large, you can't do a delta neutral strategy. You could sell a put. You could sell this 25 put right here, take in 117 and credit. Buying power is 453. So that's a good ratio. Uh, your probability of profit is 65%, and you have an 82% of keeping half of this. So that's something that I would, and this is the healthcare sector, just because now I know nothing about this stock. I really don't care to know anything about this stock other than the fact that it's in the healthcare sector. The healthcare sector has been beaten up. I got an IV rank of 39. I do not have earnings in the cycle that I want to trade. So it checks all the marks. Stock is down. IV rank is over 30. It is, it has the liquidity. I have a look at open interest. I see thousands of contracts in the open interest. Bid ask spread is not too bad. I can come in here and sell a put, and I got a high probability trade. And selling this put, I don't care about the market. You want the market to go up, but it can sit right here like it has and really just do this and do it for about a week or two, and you'll be closing your trade out, taking about 50% out of the trade. Now, the reason why I chose the healthcare sector, like I said, is because it had been beaten up. All the rest of them haven't began yet to be beaten up. Let's take a look at XLK, which is the technology sector. And you can see we have a channel in it. Now, if you look, you see how touch, touch, touch. This one didn't quite touch, touch, touch here. So we looking for something to break out one way or the other. I expect a violent move out of this range. If I had to bet, I'd bet to the, to the downside, but I don't know for sure. So when you have, and we have a low IV rank. Now this is something, a particular stock or underlying, where I would be looking at doing something like maybe buying a put spread, or something like that. Generally, you can buy options. I wouldn't buy individual options, but there are ways to do trades around buying options when you have a low IV rank. Like I said, like buying a put spread, or buying a debt, buying a debit spread, right? You could buy a call spread if you think it's gonna go up, or buy a put spread if you think it's gonna go down. I have been known to buy iron condors, um, using a gamma iron, banking on a big move, which I expect to get when it breaks out of this range. So that's why I seen this here. So I'll be watching XLK, and I also want to talk about Apple. So if you're somebody that's, just because I seen, when I see a nice chart, and you see this triangle here, how Apple stayed in a range, and then we got this big move. Whenever you see a stock range and then create patterns like this, similar to what, like here, this is a pattern. It's in a range. We are looking for a breakout out of that range. And you generally get big moves when it does come out. However, after it comes out, then a lot of times you'll see that the price action will come back to with a into the range where the actual uh, pattern, where the candlestick pattern developed. Now, I don't know anything. I'm not saying anything bad about the Apple fundamentally. I'm just saying I'll be watching to see. I may try to put something on this week. I may, get a little bearish or, get creative with some type of spread to take advantage of maybe a downward move in Apple if it doesn't happen before Thursday. But we will put a trade on Thursday live. The plan going forward is to do some live trading on Thursdays. Um, those seem like the best days for me to be able to trade the opening of the market live with you guys. So make sure you stay tuned in. Got some big things planned for 2025. A lot more live trading. You'll be able to follow along with my account, see my wins and losses. And if you want to partake and follow some of the trades, you do so at your own risk. But you'll be at least be able to see them and see some of the setups that I act on, and then I'll post them to the community notes. I have not decided if I'm going to charge for this or not. I believe I am, but I may do like the first one for free, the first few for free so people can see, exactly what they'll be getting if they choose to pay for that subscription. All right, guys, with that being said, be safe this week as far as size of your positions. I would be real small with stuff. I do expect more volatility in the market. We got a lot of stuff going on geopolitically. We got a lot of stuff going on in the world, period. And the market, even if you don't watch the news, even if you don't care about what side, you're not picking a side, you Democrat, Republican, yeah, what side of the Ukraine Russian war you on, what's going on in the east, the Dior bags in the sky. It the market will tell you before any of that is stuff going on. When I see this much red, I can pull out my phone and see all this red. I know something going on. And the market will tell you, guys. If you go back the last video, I didn't do one last week, but if you go back to the week before, I came on here and I went over this harami. I went over this candlestick pattern right here a couple weeks ago. And I said this signal a down pattern just by looking at the candlesticks. When you learn that, I would advise everyone to study candlesticks. Because once you see certain candlestick patterns, then you know a move is coming. And if you can point that out, like you can look at a candlestick pattern and be like, certain candlestick patterns I'll be like, I know a move is coming. I don't know which way it's gonna go, but with options, sometimes it don't matter. You can apply neutral strategies where it don't matter which way it go. If you know you're gonna get a big move, you can buy a strangle. You can instead of I probably wouldn't buy a strangle. I mean a straddle. Even though you can buy a strangle, I wouldn't do that. I'd rather buy the straddle than to buy the strangle. And the only just so just for giggles, just to show you guys, straddle would be coming right here at the money, buying here, buying there. That's buying the straddle, right? And you can see wherever the green is, that's the type of move you need to make money. So now if you wanted to buy like a strangle, it would be something like this, like buy here and then buy there. That's the difference. Even though I definitely wouldn't do this, but that's what it is. But I wouldn't do that. Or you can come up here, clip this downward arrow, and then you got straddle right here. It's on short, change it to long, hit go, and there it go. It does it for you. And then it shows you where you see the green at is where you make your money. and then clear that. And then if you go click down and then you go to strangle and then you go to long and then you hit go and you just have to move it to which one you want to buy. Same thing. But you will move that out and move this down. Not recommending either trade. Point is, if you know you're gonna get a big move, you can decide to, if you would have bought it here because you got a harami here, you made money. You bought a strangle, a straddle here, excuse me, you made money. On that one day, you got paid. Because these are weekly candlesticks. If I was to look now, you go to the daily chart. That's what it looks like. If you'd have bought it up here while it was in this range, then boom, you got paid in one day. So anyway, guys, with that being said, I don't want to make this video too long. Check um, in the comments. Let me know what you're trading, what you're looking at, what you're thinking about. Let me know what you want to see me do on Thursday. Uh, I had something cooking. I'm gonna put the first trade on of the year on Thursday. I'm gonna wait till Thursday because then the account starts over. The first is Wednesday, which is a holiday. Markets will be closed. So Thursday, we'll be back on here and we'll get busy. We'll see what we got to cook with. I might do some day trading or something like Monday or Tuesday or something like that. But on Thursday on the live show, we're gonna sell some premium. With that being said, guys, I'm gonna be out. Peace.